ऑल राइट, शुरू करते हैं सर. लोग आई थिंक अब ज्वाइन इन होते रहेंगे. वी हैव ऑलमोस्ट 50 पीपल विद अस, सो आई थिंक वी हैव अ गुड इनफ ऑडियंस टू लिसन टू अस. लेट्स नॉट मेक देम वेट. ऑल राइट, सो आज अगेन बहुत मजा आने वाला है. मिलिंद सर हमारे साथ हैं, जो हु गोज ऑल्सो बाय लेजी टर्टल. सर मैंने वो बुक खरीद के रखी हुई है टर्टल ट्रेडिंग की. मैं आज तक उसको पढ़ नहीं पाया हूँ बिकॉज टाइम नहीं मिला है. आई वुड लव टू स्टार्ट विथ थोड़ा सा आपके बारे में. हाउ डिड यू get into stock markets? How did you reach this point where you are today? And lazy turtle के पीछे जो mystery है, जो पूरा एक स्टोरी है, उसके बारे में थोड़ा जानना चाहूंगा सर, अगर उससे शुरुआत कर सकें.
Hey Vishu, I believe we are okay in both Hindi and English, right?
Yes, yes, absolutely sir, both works. Hindi, English
Okay.
सब चलेगा.
Right. So first of all, thank you for having me over here on this space. I love your platform, the way it is working and helping the influencers connect with the community as well as community benefiting from it. And secondly, thank you to everyone who is online now, spending their time and taking out to hear my part of the stories and my views. So yeah, how did the lazy turtle start? Okay, so I have been into the market since 15 years while I was doing a job. So while being busy in the industry, I didn't get much time to really look into how my stocks were going and how things were happening. So somewhere around till 2015, I spent a lot of time with mutual funds, and 2015 onwards, I started looking into the stocks by myself. And as most of the people over here start with fundamental analysis, majorly to convince the people around us that I am getting into the stock market for the right reason. Because if you tell anybody I am getting into the stock market with technical analysis, most of the people have an impression that finally this guy is getting into betting, a glamorous way of betting. So to get that social acceptance, I, like others, started with fundamental analysis, but then realized that yeah, timing the market is required, because all good stocks that I was sitting into, at some point they went into a profit booking, more so in the end of 2016 to 2018 cycle, and I realized I really lost some 20-30% from the top on my portfolio just because I did not exit well. So 2018 onwards, I moved into senior positions into management, so that left me with less time to look into the market, and that is where the philosophy of being lazy got in. I got introduced to nice website called as charting.com, more so for its scanners. The dashboards were not there that time, and I used those scanners. I set up those alerts in such a way that they would ping me around 2:30ish at when the end game starts in the market, and based on those scanner results, I used to act in the market, and this is where the laziness got into me. Things went well, and in the 2020, when actually the COVID came in and we went into a crash, that is the time when really I saw a great opportunity in the market. And while I was at home due to the work from home thing that kicked in, I got time to get on Twitter and started sharing my ideas. Got a lot of energy from the people also, and that made me think that, is it something that is I am more passionate about, then why not to move it into full time. And so in 2020 August, I left my formal job while I was a director in one of the MNC, which was having a captive development center in Pune. I went full time into training, coaching people, as well as spending my remaining time in analyzing stocks and building up and sharpening my all the tools, sharpening my scanners, sharpening my dashboards, and making it more data oriented, getting away from the biases that market really mentally pushes you into while it is rising as well as while it is falling. And I found data as a big friend, coming from the IT background, and this is where the turtle philosophy kicked into me while I was thinking about training people. Because if you really understand the story behind turtles, you would know that these guys really got into a philosophy that anybody with an average aptitude also can succeed in the market, only if is given the right set of rules and trained to follow it strictly. So these guys really converted, they were working mostly in commodities, and they converted around 40 million into 400 million within 6-7 years, and then the group disbanded, and many of the turtles actually became fund managers on their own. So this philosophy I liked, because if I want to train people, I want to really deliver a program which will give results, and that is where the results would be in the form of scanners. The deliverable would be in the form of a process which will have scanners, which will have dashboards, and then people have to just follow these rules and manage in the market. And being a big daddy turtle, I named myself Lazy Turtle, so that people really get into the philosophy is that market is not a fast money making machine. At times you will, but otherwise you have to really think, have a laid back approach to the market. Let the market go through its volatility, let it figure out its direction, and then rightly time it when you enter it. Then again let it go through its volatility when it is trying to come down, and then you exit out, right? So that is all that part of my story is, that I would love, on further details. Yeah, if anybody wants to engage further, more details I would love to share. Yeah.
Right, absolutely. So thank you so much for that, sharing for with us all of that, sir.
Definitely.
So I was
Yeah.
asking, just to put this thing in context, what we learned from you just now. How would one deal with current markets? How should one deal with current markets according to you? So to put it in context, I kind of ask this from every trader I can, every expert that I can, every investor that I can. That like for me and the entire COVID generation जिन्होंने stock markets अभी join किए हैं recently ही 2020 में, we have not really seen this kind of correction in the markets, this kind of fall in the markets. So how should one deal with them according to you, sir?
Yeah, so first thing that I would really build the case around with the life cycle you had since you started the post-COVID period, and we had around 6 to 7 quarters of a state uptrend, right? So one thing that you should learn from that uptrend was that market creates biases in your mind. Through that journey, we got into two bad habits. One, if I pick up a stock, it runs up, and even if it corrects, it bounces back. Okay, if it happens with you twice, thrice, you get into the bias that this stock doesn't fall. Okay, and which is a very, very kind of, I would say, a very risky bias or a very dangerous bias, because after getting into this bias, you get blinded to the fact that actually markets correct and they don't always bounce. So then what would have happened is, after October, you would have got shocked to see this behavior, that stock like Deepak Nitrite, stock like Balaji Amines, stock like Alkyl Amines, they didn't bounce back. Okay, so the learning first you should pick from there is that never let the market condition your mind, because if it conditions your mind, you get into the bias that this stock will run for life, this will not come down, and that is where when it starts coming down, you get into a argumentative mode, you get into a disagreement, that and you literally deny the fact that things are getting bad, right? So don't allow market to create that bias in you, that it is always going to go up, it is always going to bounce up, or rather on the other side, it is always going to go down, it will always going to crash. The bounce is not going to sustain. So first thing first that you should learn from your journey till now is, post COVID, is don't let the market create a bias. Second thing, now how do we really break this bias, right? I gave you the problem, but how to solve it, right? So for this, I would give you a perfect solution is, start working based on data. Based on what is the data, what is the chart showing in front of you, start working accordingly, right? So if you are in today's market or in any market, I would always suggest keep a watch on whether overall what is the direction of the market, is it trending up, is it trending down, and at what strength it is trending, right? Then come down to your sorted list of sectors. Based on their strength with respect to the market, decide which sector to work upon. Again, this is a purely database decision. a typical relative strength scan, relative strength chart would show you which sector is running ahead of Nifty, which is lagging. That way, you are again not biased in terms of working on a particular sector. And then again, come back to the stocks. And for stocks, I would prefer that take this journey from the market strength, the sector strength, down to the stocks. And in stocks, what you should typically be looking for are entering the stocks when there are near base breakouts. Okay, so nowhere get into a stock which has run up far from its base. So I'll give you, in today's times, you should not be entering Chennai Petro, you should not be entering MRPL, you should not be entering Voltamp, because if you just put them on chart, you will see that they have run away from their consolidation basis. And what happens when stocks runs away from a consolidation basis? People have made a good amount of easy money, and they will be happy to get out at any time from the stock. They will have no reason to fight against the upcoming downtrend because they have already made money. They will say that better be safe, pocket my profit and go away. This is where you will always observe that stocks which are run away from the basis are the ones which get booked out first, while the ones near the basis actually have a higher chance of giving you that bounce, which will help you continue with the stock and actually make a good amount of money. So this is what is first thing that I would like to let you know, that from your experience of the post-COVID rally, learn one thing, that never let the market create a bias inside you, never let it blind you from the facts. And secondly, use as much as possible pure play database decisions to play in the market, because it is very natural that we would start loving a particular stock, we would start loving a particular sector, and very natural and very easy to get into a denial mode that I am a long term investor, I can fight with the slowdown, I can fight with the recession, I can let the stock go down and wait for it to recover. We can get into that bias and into that mindset and avoid that by actually seeing what the market's data is showing you, so that you can take a very realistically correct decision rather than going in a blinded alley where you don't know actually when you will be able to again come to the profits. Yeah.
Right, absolutely, sir. Sir, so this is of course one that you have to have conviction in markets se nahi karna hai, but how about in general risk management? How should one look at it from your perspective, sir?
Yeah, in case of risk management, I would really like you guys to really look at your own psychology. What is your psychology? What is your mindset? And what is your going to be your trading or investing approach, right? If you are somebody who has got a good amount of capital, is having a good amount of patience to hold off through long-term downtrends, and be still be financially stable, to work without the money coming from the market, then this is something where you will have to develop a kind of a long-term investors approach, right? So this is where in case of these guys, the stop losses will actually work out to be deeper and bigger. So these guys can also work onto a fundamental based stop losses, right? Now if I see the particular EPS growth getting down on quarterly results, that time I will take a call to exit a stock, right? So it is based on your psychology and the good amount of capital that you are having. Now on the other hand, if you are having a limited capital and you are somebody who is having, you are also low on patience, so you would typically like to go with the momentum. In such cases, I would always advise you that strictly follow the technical analysis and the charts, and as far as possible try to combine in with your good fundamentals, right? So first thing first, for us to really manage our stop loss is always work on the highest and best probabilities in the market. If you are getting into a risky stock with bad fundamentals at a stretch level, even having a stop loss doesn't make any sense, because actually you are playing a losing game. So first of all, pull yourself out from the market. Really try to identify those cases where you are having a higher probability of making money, higher success rate. So study strong fundamentals, then watch out for these stocks to come at the right level where they are coming out of a good base. Longer the base, I always say, longer the base, higher will be your race, right? So try to figure out stocks with great fundamentals with a longer base and then put your stop losses over there. I am very much a Mark Manevrini follower and William O'Neill's follower, so I don't go anywhere beyond 10% stop losses, hard fact at the from the point of entry. Beyond that, as you start rallying, always have a trailing stop loss. Now these trailing stop losses you can have based on any indicator like RSI or an MACD or a moving average, or even you can follow super trend indicator. And I have seen some folks also following a stop loss percentage based from the high, recent high. So these are some approaches that you can take when you really decide on your stop loss. But remember, stop loss is not just about putting a stop loss at the time of a trade, taking a transaction. Stop loss also involves analyzing and taking the best bets in the market, so that the probability of you getting into your stop loss itself is reduced. So this is how I would, look. I would advise you guys to look at your psychology, look at your mental setup, what kind of game you want to play in the market. I am not into FNO, those and hedging approaches, so I would not really get into that and comment on how you manage your stop losses there. But on the positional side, definitely these are the two approaches I keep. If my fundamental stocks, if I am tracking, I have a deeper stop loss, many times a fundamentals based stop loss, otherwise a technical stop loss, but now that one goes a bit deeper on maybe a weekly or a monthly time scale. So this is how I would like you guys to look at it. But all in all, never get into a transaction without knowing your stop loss, that's for sure.
Right, absolutely. Thank you so much for that, sir. Sir, before I go to my next question for our audience, I have pinned a tweet on this space, on the top of this space. If you have any questions for Milind sir, please put them in the comments of that tweet. We'll try to cover as many questions as we can towards the end of this podcast. Sir, my next question is it's kind of a dual question, but they are kind of related as well. First question is about portfolio sizing. So, what do you think is the ideal number of stocks that one should, if you think there is an ideal number of stocks that one should have, and one is that, and second is diversification versus focused approach. Ki should it be a short portfolio, focused, very short portfolio, or it should be a diversified portfolio so as to kind of diversify your risk, or for many other reasons. सो दोनों पर्सपेक्टिव्स पे सर आपका थॉट चाहूंगा.
राइट, सो फर्स्ट थिंग जो मैं कहना चाहूंगा कि look at portfolio sizing and portfolio management more from a risk management perspective. Many people look at portfolio management to really look at how can we get more returns from the market, but I would suggest start looking at it as your tool to how to minimize your risks in the market. Now whenever we go about portfolio sizing, first thing first, what is the amount of exposure that you should have to the market? Think from that amount that you would like to expose to the market out of your personal finance kitty. Okay, so people recommend that it should be, I think, X minus 100. So whatever is your age, subtract it from the number 100, and that much percentage of your personal wealth should be exposed to equity. But don't take it that simple and that easy way, because what matters here is that psychologically how much drawdown you can really bear in the market. Suppose your age is whatsoever and your exposure to the market through that calculation comes say 10 lakh rupees. Don't come to the market and with exposure of 10 lakh rupees right away, because what will happen when you come to the market, invest 10 lakh rupees, there will be drawdowns. Market goes in a downtrend, downfall also. Even if you apply stop losses, finally some money will go away from your account. Now if this loss comes to around 2 lakh rupees, are you able to handle that loss peacefully is the first question you are going to ask, right? If you cannot handle that 2 lakh rupees and if you panic, what will happen? The moment you go into panic on your portfolio, I have observed two things. One, you sell your winners, and two, you hold on to your losers. Because what happens, you go into that revenge mode कि market ने मेरा पैसा लिया है तो सबसे पहले मैं market से पैसा बाहर निकालूंगा. So I start booking all my stocks which are actually making profit, and I hold on to stocks which are actually in a loss. And we know in the market what goes down faster, and then what happens, this loss actually becomes bigger, and one fine day that person takes a decision that it's time to leave the market, it's not something that I can work with. He moves to mutual funds or totally out of the equity market. So be very clear that once you come into the market, ensure that your size of amount money that you are exposing to the market is something that you can bear when it goes into a downtrend. So based on that, decide your number with which you are coming into the market. So I would suggest start smaller when you are new to the market, and then as you develop your expertise, then you start ramping up your portfolio. That is the best approach that I would suggest if you really think about the big picture, how much money I should put into the market. Then comes your next question is how many stocks I should have in the portfolio. So frankly speaking, there is no perfect answers to it. It again depends on how much the strong the market is going. So if you have a market like what we had post-COVID, it is a clear unidirectional uptrending market. Now this is a market where somebody can think about having a concentrated portfolio, because your hit rate is going to become high. You would name any stock in those days above 50 moving average and you would make money. That was such a great period that it was. So if you are really in a market which is moving in a clear direction, you can think about concentrating your portfolio, but that also after you have developed a good amount of experience and expertise in the market. Because for a concentrated portfolio, your study should be very good, very strong, because what happens, the moment you make a concentrated portfolio, your risk in the portfolio increases. Suppose if you are having 6 stocks in your portfolio, even a 10% loss on each stock, even a 10% loss on each stock actually comes to around 3.33 to 4% per stock on your capital. Okay, which is quite riskier. So एक स्टॉक भी अगर आपका 10% स्टॉप लॉस को हिट होता है, आपके कैपिटल का 3.33% का लॉस हो जाता है, which is quite a dangerous way to work in the market. So this is where the moment you make a concentrated portfolio, your risk actually goes up. Now on the other hand, if you have 20 stocks equally weighted in your portfolio, what will happen if one hits a stop loss of 10%? Your total impact on the portfolio is actually 0.5% of your capital. Now this is something which is bearable. So even if you lose a bet, you don't hurt yourself much, and you have sufficient capital to again deploy in the market and make money and compensate for that loss. Got my point? I always say that your portfolio or your capital is like an ammunition in a war field. If you lose your ammunition, and even if an enemy come in front of you unarmed, you can't attack on him because गोलियां ही खत्म हो गई है. So even if you get a great bet in the market, you can't bet on it because your capital you have lost, right? So that is where concentrated portfolio has a higher risk element. Now what comes with a bigger portfolio is your gains actually start averaging down. Because if you really make a huge big portfolio, you just don't know which stock is running, which stock is not running, and overall even if a stock makes 20-30% and if you are having 30 stocks, the impact on your portfolio is quite low. So this is where you will have to find a golden mean, not too big a portfolio, not too diversified and not too concentrated. So typically I recommend people that start off with a 20-piece portfolio, and as you build expertise, bring it down up to 10. But going beyond 10 is something that I personally don't recommend, and I don't personally try it out also. So look at portfolio sizing and portfolio management more as a bigger risk management tool. that is what is very critical, and that was really a great question to have right up front. Otherwise, people generally start talking, where should I pick up a stock?
Right, absolutely, sir. सर नेक्स्ट क्वेश्चन ऑफ कोर्स थोड़ा सा अभी तक हम लोग काफी कुछ स्ट्रैटेजिक डिस्कशन कर रहे थे एंड आई हैव अ लॉट मोर क्वेश्चंस ऑन दैट बट थोड़ा सा और एक मेरे पास बैकएंड में बहुत सारे मैसेजेस आ रहे हैं लोगों के तो उस पे भी मैं उससे भी जानना चाहता हूँ डू यू हैव सम सो ऑफ कोर्स नन ऑफ दिस विल बी एनी बाय और सेल रिकमेंडेशन दिस इज ऑल फॉर एजुकेटिव पर्पसेस सो कैन यू अब हम लोगों ने थोड़ा बहुत स्ट्रैटेजीज को डिस्कस किया so usko maybe to make it slightly live in the example, can we maybe discuss maybe the current market from your strategy or any stocks or any sectors that you have may have in your watch list right now? कि उसमें क्या हो रहा है?
Right. So if you really come about to, let's talk about sectors, how I would go about picking up the sectors, right? So simply what I do is that I have my sectors kind of mapped in a watch list, right? And then I have put up a calculation over there for finding their relative strength with respect to Nifty on a 55-day scale, okay? Now this gives me a sorted list of sectors which are running stronger or weaker to the Nifty, right? So if I today look into my scan with that kind of a logic, what today I see is that the topper in terms of the sectors which is running strongest in the market is anybody guess it is Nifty Auto, okay? Now this is where again the database decision is pointing me towards the Nifty Auto. The next sector which I see behaving strongly is FMCG, then the CNX energy, and I find that slowly pharma is about to overtake Nifty in its strength. So these are the sectors where I see currently action happening: auto, then FMCG, energy, and then CNX pharma, which is coming up. Now I believe this would have clarified to you about how and what my approach is. So this is basically a relative strength based approach, comparing the indices relative strength with the Nifty, and then focusing on the indices which are actually stronger than Nifty. And when you really want to pick up the stocks, typically people say that try to work with stock with a higher relative strength, but really higher relative strength also means that you have run away from the basis, you have run away far from your breakouts. So typically if a new sector comes into a strength above Nifty, try to look for the stocks within that, and you might find actually, or rather you will find stocks are in that sector coming near breakouts, and that is where you should start your journey. So like in auto, I would be today be more selective because some of them have run away, while in pharma I will be really watchful that okay, something is coming near a breakout, let's look at it. So this is how I would really go about picking up on the sectors. Even energy also looks pretty kind of, it is stronger, but it has retraced, so we might get some good entries over there also.
Right,
And
absolutely great
next
stuff.
one was
Yeah.
about stock, right?
Yes,
Next one
yes.
you were asking about stock, right? So for stocks, you can always go through my Twitter handle, but I would still bring up a nice breakout that has happened today, and which is actually happening around the pharma, FMCG, a mix kind of a thing, and that is Abbott. Okay. So if you really look at the chart of Abbott, I have opened it here. Unfortunately, Spaces doesn't allow us to share the screen and all that. But if you really open out the chart of Abbott today, in fact, it is there on my Twitter handle also. So you can go and look in my the last tweet which I did before this session. You can see that how well Abbott has given a breakout, and now you can see this, as I say, is the longer the base, higher will be the race. This is a nice 5 months base that it has created, a very typical volatility contraction. Now if I sound too fancy with the VCP, I would tell you that volatility contraction is nothing but from the breakdown zone till the stock is breaking out, you are finding that stock is making higher and higher lows. Okay, so it is basically retracing less from the resistance line as we come near the breakout. So you will find that kind of a behavior in Abbott also, and this is how then I would pick the stock like Abbott, because yes, it is looking from a sector which is just about to cross over the Nifty in terms of its strength, and the stock itself has given a good setup to me. So this is a typical approach that I would take. And then if you really want to look at auto, how I played it, so if you see way back in the beginning of May itself, there were two biggies in auto, that is Mahindra and Mahindra M&M, and then another was TVS Motors, which gave a nice breakout. So if you are onto the M&M chart, you can observe it gave a nice breakout somewhere around 26th or 27th of May itself, 1 month ago, and from there I started riding it, and it was the same time when actually Nifty Auto also came up ahead of Nifty in its strength. So that relative strength, then tracking it down to M&M and then also TVS Motor at the same time. So this pretty much gives you the overall idea that how we can just start working on the market purely based on data. We know these stocks are great, there is great fundamentals and everything is there, the story is good and all that thing, but when should we enter is very critical, because if you sit into a fundamentally great stock when it is not running, at times you would get frustrated, you would leave that stock, and it would actually get into your mindset or a bias that this stock doesn't run. So the day actually that stock starts running, you go in a denial mode and poof, you miss the opportunity. So the best way I have observed to stay away from the biases in the market is definitely go on the charts, go on the database decision. So if you look at TVS Motor, its breakout happened again around 20th of May. So 20th to 22nd May is when TVS Motor gave a breakout. So this is how I track the positions in the market, staying away from I hate this sector, I love that sector, that stock is great for me, that story is wonderful, to okay, what is coming up, what is looking good, and then maybe do study around it. You might find some brokerage reports, go around the influences on the Twitter, on the YouTube, you might get good inputs, and that backs up your decision, and then you flow from there. This is how I typically approach the market, and my focus on the entries is always stocks which are making nice basis, and enter them at the right time. And if you miss entry, don't worry, let them go far because that is where you take the risks in the market, by entering them late from the base breakouts.
Right, absolutely great. Thank you so much for that, sir. Sir, अभी थोड़ा सा ट्विस्ट करके आई हैव अ लॉट ऑफ क्वेश्चंस, इसको थोड़ा सा रैपिड फायर क्वेश्चन में हम लोग करेंगे, बहुत छोटे छोटे क्विक क्वेश्चंस मेरे पास बहुत सारे हैं आपसे. सो हु इज योर फेवरेट ट्रेडर और इन्वेस्टर?
Uh, Trader and investors, if I really go for in terms of trader, I think I would start with uh, Dow Jones and Wyckoff. Now these are the guys who actually founded this story about the market stages, and the phases of markets entering at the base breakouts and all that. So if you really talk about the philosophy, the idea, it all came from these two guys, Wyckoff and Dow Jones. And now my favorite trader, I would again go back to that era, and he would be nobody but if you have read that book, How I Made 20 Millions, Darvas. Now Darvas is my favorite because he is the life that most of us retailers are living in the market. You know what, he was not a full-time trader, he was doing a daytime job as well as a night-time job. Actually he was managing the performance teams globally, that too. So he was somebody who was working professionally and also trading and investing, and devised his own strategy, which somehow hooked up with the theory of market stages only. If you look at his boxes theory, is nothing but base breakouts. So that is where it is, philosophy of really working in the market, I would pick from Wyckoff and Dow Jones. And if you talk about the trader that I would look for, all-time favorite is, I would go for Darvas, because being busy in your profession and still doing trading and making money is something he really gave the weight forward to the guys like us that you can make money while working and doing a job, and the strategy that you can apply. Now, in terms of guy who really simplified my world of trading and investing, I would point out to Stan Weinstein. So, if you have read his book, Stan Weinstein's book, that is the first book I would recommend anybody who gets into technical analysis and all that. Read that book. That guy within his 160 pages really brings you down. 160 pages on the buy side I am talking about. Okay, he has later half of the book on the sell side. So within that 160 pages, the way he really gets you softly landed into technical analysis is amazing, and I would recommend anybody getting into technical analysis, don't start with understanding candles and bullish candle, bearish candle, engulfing, morning star, evening star. That's all is scary. That will make you feel that markets are complicated. Instead, start with book by Stan Weinstein. It will simplify, have you softly landed in the market, and from there you can take off. So this is what I would really tell a mix of people who I would say have influenced my journey a lot.
Brilliant, sir. Thank you so much for sharing that, sir. Next question, sir. मैं books पूछने वाला था, but I think we have pretty much covered quite a few books. Okay. Next, sir, which is your favorite? Or before I go there, let's discuss one maybe incident which was your worst trade ever, or a mistake, the biggest mistake that you really regret, that you should still to date you regret. It may be a missed opportunity, or it may be a mistake you did while trading.
I would point out the whole the way I dealt with the 2018 crash. If the guys who are there online who were active in 2018, you would know that HEG was going great, Rain Industries were going great, then you had Bansali Petro was going great. A hell lot of good profit that I had, and I was sitting on it, and with the bias now, with the bias that अरे कुछ नहीं होगा, ये 2-3 दिन गिरेगा फिर ऊपर आ जाएगा. So with that bias, I was sitting on these stocks, and actually once they went down, they just didn't bounce up, and that is the kind of a pain that I really realized, losing a lot of money from the top. That is what I would suggest was something which forced me to start figuring out your exit strategies more. We focus too much on selecting stocks while entering that we forget what would be my exit strategy. So I would suggest that line of experience was something which pushed me towards technical analysis, which pushed me towards rule-based investing. Have rules for entry, have rules for profit booking, have rules for exit. So that is where I would point that that was a missed journey, the wrong step that I took, which got me into a more an observation and learning mode, and that is where from my all strategies then started coming into place. Yeah.
Right. Thank you so much for sharing that, sir. Sir, although I said that this will be a quick questions here, but I really, really want to ask this. Actually, I think I missed this initially. Exit strategy आपने अभी बोला, and I think that is something that really not I'm pretty sure 95% of the people do not have their exit strategy straight. I, for one, am very sure I know how many trades I've taken क्योंकि breakout था या कुछ अच्छा लगा या कुछ news आई and वो ऊपर गया. So stock did go up, but then I did not exit at the right time, and then वो पूरा वापस आया and even loss भी हुआ मुझे. So could you elaborate a little for us on exit strategies and how to manage our exits? How can one go about it a little?
Right. So for exit strategies, I'll give you some analogies to really understand how important it is. First analogy is from the mythology Mahabharata. So we were all knowing very well that Abhimanyu went into those Chakravyuh with all the knowledge that he had. But unfortunately, that was the half knowledge that he had, was how to enter the Chakravyuh, not really coming out. So this is a very pertinent example that should be impressed on your head, is that exiting is very important. Many people also in the war movies, people say that मैं मर जाऊंगा लेकिन जीत के आऊंगा, and then the response is that once you die, you can't win. Got it? So once you lose, you can't win. That is what you should remember in the market. So exit strategy, the most important thing you have to remember is that market is a net sum risky game. Whatever you do, there are so many variables. I can count hundreds of variables in the market, right from North Korea zooming in one rocket over the Japanese sea tomorrow morning, and right from some misstep by Putin, and any bank statement coming from any of the bank governors here and there, and then the company's performance itself, the commodity prices itself. So market is a game of lots of variables, and frankly speaking, we can't comprehend them. Nobody can. At least I can tell you 10 reasons to convince you why we went up today. I can give you 10 reasons why we went down today. I can give you 10 reasons why we were sideways. So anyway you like to look at the market, you will get the dots to connect and sound it reasonable what happened. So that is what is the situation in the market. So actually you are playing with a lot of variables. Now how do you really get successful to win within these environment which is having lot of variables? So first thing first, you need to have a process. Believe me, you need to have a process in your investing and trading journey, because unless you have a process, two things you will not be able to do. One, getting consistent results. You cannot make a tea with different quantity of sugar, different quantity of tea, different masala every day to taste same. You getting my point? So you can't make money in the market under all conditions by using different processes. No, you'll have to figure out one particular process by which you are able to get results, and then fine tune that process to get higher success rate. Now this higher success rate, what it does, it gives you a higher probability of winning, right? So this actually takes care of winning overall in the market. Now what to do where you will lose, because you are not going to hit 100%. Right from Jesse Livermore to Mark Minervini to even Stan Weinstein and even Darvas, you are not going to win every trade. So now how to deal with the cases where you are going to fail? The best way to deal with the cases where you fail is cut your losses short. Because once your structure has been dissolved, for me it is a base. Once that base breaks down, really what is going to happen? Stock is going to figure out, again there will be new set of buyers in it, a new set of sellers in it, and they are going to figure out when is the right time to really become confident and start running again with the stock. You know why the stock makes basis is because buyers and sellers are kind of trying to build confidence in them that this thing is right to let it go up. Okay, because it needs courage to start buying at a higher price. तो सब लोग अपना मन बना रहे होते हैं, और जब ये मन द्विविधा में होता है, when they are double minded is actually when the consolidation happens. When people see a chance that this should go up and see a chance, oh maybe it should go down, and somewhere they are equal weighted is somewhere that bases are formed in the market. At that point is somewhere where you should be trying to make sure that you enter when people make a decision कि हाँ अब इसको ऊपर जाना है. This is the first place where your stop loss actually becomes very tight, because that is the spot where people took a decisive decision. If they fail from that decision, very easy for you to exit, and exit also with a smaller loss, right? What happens if you catch up with a stock which is far away from base? You will think that it will bounce up, and where it will bounce at the base. Now you have run up so far that coming down to that base means you will lose a big amount of money. So first thing first, your stop loss, try to enter near the point where stock gives a breakout, so that if the breakout fails, there is less amount of money within which you will decide कि मेरे को निकलना है. Got it? So now that is where you have your rule that first entering near the highest probability of making money, entering near the highest probability of getting a support. You know, you remember cricket? So we were very worried if Sidhu would come out to hit a 6, or Shrikant would come out to hit a 6, or Sehwag would come out to hit a 6, because what these guys would do, they would leave the crease and walk onto the pitch, and if the ball is missed, they are hit out, right? Compare that with how comfortable and surprised you were when Tendulkar hit a 6 or a Dravid hit a 6, because these guys were putting their 1 foot behind the crease, so you were not worried कि ये छूटा तो out होगा. वो तो नहीं होने वाला, because one leg is behind the crease, and this is what you have to do in the market. When you play the match, make sure that your one leg is behind the crease, and what is that one leg is? Your stop loss. The crease is your base. make sure that your stop loss is behind the base. Okay, make sure that you are behind the bunker before you fire to the enemy, because if you take a position away from your bunker, you can get a hit, right? So this is where first thing you should think about stop loss is how near you are near the base, and then plant your stop loss below the base, and this should be typically try to keep it tight between 10 to 15%. Beyond that, if you are taking your stop losses, I believe that one thing, you miss that opportunity, you are entering late, and secondly, you are going to hurt yourself big if these losses accumulate, right? Yeah.
Right, absolutely. Thank you so much for that, sir. Okay, so sir, resuming my line of questioning. Next, I of course we discussed the one mistake that you may you still regret. Next thing, of course, corollary to that is the best trade that you ever took, and you are still kind of proud of it that you did it. It may be your first trade or some other trade that you took, and you're like that was a really good find that you had.
I would say that any trade I take near the base breakout is my best trade. अभी वो आगे किधर जाता है वो ऊपर वाले की मर्जी है. So
बट सर फिर भी
I
कुछ
would say
इमोशनल टच
that
कहीं तो होगा, किसी तो ट्रेड में होगा, मे बी पहला ट्रेड रहा होगा, इफ यू कैन शेयर दैट अदरवाइज.
no, definitely the trade I am really happy about are the RT drugs kind of a case, man. It broke out in the April, May. Can you believe when the whole market was frustrated in March and all that? Suddenly in the April, I found it, it is still there in one of my favorite early tweets. Suddenly on April 24th, I found that, hey, this stock is coming out of a 5.5 year consolidation. Can you believe it? आरती ड्रग्स आर कमिंग आउट ऑफ अ 5.5 year कंसोलिडेशन. हम 6 महीने के कंसोलिडेशन को देखते हैं, 5.5 year ऑफ कंसोलिडेशन, एंड व्हाट वे इट फायर्ड विद इन 6 to 7 months it was 5 times. Now this is something that really made me, what I would say, cognizant of the fact that the only place you should work hard in the market is finding these base breakouts, enter there, and then learn how to trail these stop losses. So yeah, this is something that I loved. Then same thing happened with another big guy, that was Tata Elxsi, a Tata Group company. So you don't doubt their intentions, you don't doubt their balance sheets, you don't doubt their fundamentals, and that too getting out of a 4 year kind of a basis. Now these were some lovely memories that I had of the year 2020, and I think now I am looking at M&M and TVS to do that, because these guys are also coming out of good long bases. Yeah, so this is what is
Right.
something, and that is where I would say, the best trade is always when you have entered right and when you have exited right. बीच में जो मिला है, that is a byproduct of the process. Don't get too much carried away with it, because that again makes you biased. That is the reason. So if you want to be biased with your process, not with the results, I would say.
Right, absolutely, sir. Okay, the next question is, I think we partly discussed that. I think I can guess, but which is your favorite indicator?
My favorite indicator? Oh my love, I love moving averages. That's it, simple.
Oh, I thought you would say RSI.
RSI? नहीं नहीं, वो तो उसका साथ में चलता है. I do use a combination of them. But if you remove those 4 lines from the chart, no, I'll be like a kid who is asked to write on a blank paper, who is used to write on a 4-line notebook. So you can get me, right? If I draw 4
Yeah.
moving averages, that tells me all the story. And if you ask me that वो 4 line निकाल के पढ़ो, तो with time I have started picking up the price action. But if you really ask me which indicator I would like to love to work with, I would always think that, yeah, moving average is a fantastic one. And on that note, I would suggest one book, Moving Averages One-on-One by Steve Burns. You should definitely read that book. It is just 150 pages book, I think priced at 440 rupees on Amazon. A life-changing book, I would say, if you read it. Amazing book,
Great,
yeah.
great. Thank you so much for suggesting that, sir. Okay. Okay. Next question, sir, is do you have a favorite sector as well? Like a little bias कि ये हमेशा आपके लिए अच्छा रहा है, या कोई एक particular आपको जिसकी नस नस आप पकड़ लेते हो जल्दी से?
नहीं यार, मैं कभी I would never let any sector become my favorite, because yes, that will create a bias. So frankly speaking, I would, yeah, there are sectors like pharma gave me good money, then IT gave me good money, and I'm now looking at auto. Then currently I would say, if you think about a decade plus story, then I would say energy is something. It's, I would not say favorite because of I like it, but favorite because the way it is placed. You know, if you look at the today's world, the sanctions, why Russia is able to beat the sanction on it? The answer is energy, the oil and gas. Why Russia is able to beat all the sanctions which people are trying to, कबड्डी चल रहा है रशिया को पकड़ने का, बट वो हाथ में क्यों नहीं आ रहा है? क्योंकि वो तेल लगा के घूम रहा है. तेल लगा है मीन्स he is having oil, he is having gas, and that is a big one that people are really not coming to term with, how to deal with it, right? So that is one thing. And if I look at India for matter, why it is suffering a lot with the import export kind of mismatch, majorly because of energy. India also knows that easiest way that anybody can arm twist India is energy. You can come to know, right? Recently there were issues where the Saudi government, the Gulf countries went bad on us and all that, and we had to react promptly. So all this is because happening is because of the energy, and plus we are growing population, the overall situation that is happening because of the global warming and all that, that itself is going to require a lot of energy, a lot of power. And then we do not have oil, but we have a good amount of land which is unused and which is exposed to quite a sunny part of the world. So solar is something that the green energy is something, then the ethanol is something. So anything which is going to deal with, help us make energy self-sufficient, make us score more greener points. I think currently, due to all the situation that we are in, and this is not a sector which is going to get story which is going to end in a year or two, because we are chasing a running goose. The demand is going to keep on climbing, and whatever speed at which we are trying to catch it up with it, it is always going to remain ahead. The importance of it geopolitically is also very critical now. So I would say, because of all the situation that we are in, yes, energy is something, the basket I would love you guys to focus on, and make these stock your targets the moment they start crossing the basis. I would not say they are there right now, but whenever they start crossing the basis, make sure that you lap them up. Yeah.
Awesome, awesome. Thank you so much for that, sir. Okay, next questions are kind of related to sectors, but they are not exactly sectors. So I think what I want to ask is, so there are some stocks जो कि मतलब all time favorites सबके रहते हैं कि like Asian Paints, Pidilite, and SDFCs, and everybody likes them. But there are certain stocks जिन पे की बहुत hot debate चलती है. People are either dead against them or very much into them. And I believe there are two specific categories of these stocks. One is PSU stocks, जो गवर्नमेंट कंपनीज है उनके स्टॉक्स, एंड द सेकेंड इज द न्यू एज कंपनी स्टॉक्स, योर पेटीएम्स एंड जोमेटोज. तो इन दोनों के बारे में सर, इन दो कैटेगरीज के बारे में आपके क्या थॉट्स हैं? डू यू लाइक और हेट पीएसयू स्टॉक्स, एंड डू यू लाइक और हेट द पेटीएम्स एंड जोमेटोज ऑफ न्यू एज टेक्नोलॉजी कंपनीज?
Again, very interesting question. So first thing I would let, in a generic way, let all the guys over that if you find somebody is hankering on a particular stock or a sector, I would say lower your weightage on their advice, because a conditioned mind might condition you also, right? So first thing first, that typically what I do is that if I am watching any YouTube video, or if I am following any influencer, the moment I see him is harping on a particular stock or on a particular sector, I try to go light on it, because he is already into it, he's already conditioned it, he might condition me also. So सुनो सबकी लेकिन करो अपनी. So make a note of what sectors people are talking about, but then come and do your own analysis. Don't get biased. The two things that you mentioned, the two sectors are very interesting. One, PSU. So in the PSU, I have burned my hands a lot. So I personally stay away from PSU. Okay, this is again a bias you can call it, but this bias has worked successfully for me. Apart from HAL today, I am not really in favor of getting into any PSU. There are two big reasons why people get into PSU. Let me clear up those biases also. The first bias that people have for getting into PSU, that they give good dividends. Okay, but go and watch Coal India. It gives you dividend ROI of around 8%, 9%. That was its dividend rate, what at which you are getting the yield. And watch its chart. You find that the way it has fallen down. So typically I look at these companies which give lot of dividend, but their prices are falling is like that. They take your t-shirt and give you an handkerchief. Okay, they take your t-shirt. That is all the money, capital you invested in that stock is lost as the stock falls down, and in the return they give you a small cut piece of it like a dividend. Don't get too much blindsided with this dividend story, because on the other hand, if you look at it, the moment a company is giving dividend, and that too much of dividend, what it tells you is that it doesn't have any growth plans in store, number one. Or even if it has a growth plan in store, it will not have the muscle to execute it. Where does the dividend come from? Dividend comes from the company's operations, the company's profit. Now a company which is growing will have a need of fund. Do you think they will give away their hard-earned money as a dividend to the investors? To some extent they will give, but not to that big dividend yield these PSUs are giving. So what happens is that clearly tells me that they don't have a growth story. Number two, even if they have a growth story, they will not have a muscle to execute it. Number three, who is owning these PSUs? The government. And government is always needing money for its operations, for its social agenda. And the way they get money out of these companies is through the dividend. So this whole dividend story in the PSU is something that you should be careful about. Don't get locked into them. I do not go with PSU. One big reason is they are giving away a lot of cash back without really thinking about their growth. Number two reason why I don't go with PSU is that no pricing power. Who these PSUs are generally serving? They are serving the general public, and being a democracy, India is not a place where government will ask them to up their prices and make money out of people. Number two, these PSUs, many of them are serving the government itself, like HAL, and then BEL, BHEL. So these are serving the government departments only. So one pocket gives and another pocket takes, and this is where government at some points make each other, either one of them compromise their pricing. Getting my point? So this is where something where PSUs don't have pricing power, they don't have growth story, and look at their management. So they are not that professional also. Obviously, it is not an individual, but the whole setup itself, where people are not given that freedom to drive their organizations. At some point, even if somebody wants to drive PSU aggressively, he will have to align with the government, and that is where the growth will start getting hooked up. So this is where the reasons why I personally avoid PSUs. And coming all to this tech companies, yes, I think I had tweeted once upon a time that the way tech companies, the IPOs are coming in the market, actually what is happening is that the VCs have put in their money, the promoters have put in their money, and then they have created a lot of noise that this is great, that is great, this is great, that is great, and they have made the whole thing look very rosy. And in the background, what was happening? It was passing the buck. My risk, I was transferring to somebody else by making them shareholders in my company. And as this chain ends, the last end of that comes to the market, wherein after all that risk of valuation and all that these guys have been carrying forward and actually extended it too far, they created a very rosy picture through whatever media, through whatever brokerage houses, and these all risk landed in the hand of the retailer after the IPO. and from there you see what has happened with these companies actually on the charts. Now, who is running with those risks? The promoters, they have made a good lot of money. The early investors, they have made a good lot of money, and now it is left in the hand of the retailers or the guys who took that IPOs, and now they are suffering with the pain. So this is where I love technology. I see a great future, but finally the question comes, kitna deti hai? Show me the money. So if a company, if a business is not generating cash, if it is not generating profits, uh, somewhere something is fishy, and in fact they are running on a cash burnout mode, that I have given you so much of money, why don't you use it? And where they are using it, giving discount to people for having free lunches and dinners and all that from their apps. Now, where is it? India is a very smart country. Consumers don't get hooked up with any brand. Frankly speaking, they are very very price sensitive. तो आज अगर Zomato दे रहा है डिस्काउंट तो लोग Zomato के पास आएंगे, but tomorrow if Zomato stops giving discount, that doesn't will not make people come back to Zomato thinking that, oh, I was so used to their app. They will not do. They will find another guy who is giving a discount and they will move away. So this is where IT tech companies, a great business model, lots of disruptive technologies to learn from, but unless and until these companies are making money, I would stay away from them. I might pay a momentum play on them for some days, but not really own them on their fundamentals. One
Right.
good tech companies I would like you guys to look at is Ease My Trip. Yeah, not everything is that bad. This is one tech company which is making good money. So don't really paint everything as red. In at least in PSU you can do that. I don't question you, but here you'll have to be observant. So Ease My Trip is a good study. You can see there that their ROI, ROC is good. So yeah, that is something that you can
Yeah.
watch.
Absolutely. इस तरीके से मेरे को भी generally मेरे को डर लगता है, but I think delivery is something, although it was kind of lukewarm because of the market scenario, but delivery is also a company which I absolutely adore for the kind of work they are doing.
If they are
Okay.
running
Yeah.
operations and getting you money profits, then yes, definitely look at them.
Yeah. All right. Okay. So, sir, हम लोग के पास दो stock specific questions आए हैं. If you are tracking them or if you want to take them, we can. Otherwise, we can definitely skip them. So, one of them is Sanjay Sarka on Gale India for long-term investment, and especially with regards to their hydrogen fuel cell production plans ahead. So, in
Gale,
case you are,
it is
uh,
a PSU company, so I will not say much. So,
all right,
as of now, it is below 200 mA, so in that untouchable zone. But yes, if you are a bottom fisher, I think yes, this guy seems to have made its bottom. It will rise up. So above, I think 142, 141, 142, a pure play, good base crossover, a very short term base crossover, but looks to be good from there onwards. Yeah, but yeah, again, it would look great, but it would have a very, I would say, a slow journey being a PSU.
right, absolutely, sir. सेकंड सर इज एन इंटरेस्टिंग स्टॉक जो आई थिंक इस समय हीरो काफी बना भी हुआ है. हमने थोड़ा सा आपने शायद बीच में पॉडकास्ट में उसको डिस्कस भी किया था. दैट इज महिंद्रा सीआई ऑटोमोटिव फॉर लॉन्ग टर्म.
I had discussed Mahindra and Mahindra, not CI. So
राइट,
Mahindra
सॉरी, माय बैड.
CI, yeah, yeah. Has given a good breakout, and let's look at the long-term chart. So Mahindra CI is looking good on the charts. Yep. So this is looking good on the chart. I can say that. So one can think about. Let me give you the stop loss also. पहले लॉस की बात करेंगे ना. So yeah, you can keep up a stop loss of around the 200 MA itself. So that should be good because you are at 232 today. So even a 10% stop loss gets you near around 200. So 15% stop loss you can keep. You can look ahead on this one because the sector is running positive. And let's look at its fundamentals if I can give you some insights. So fundamentals are not really great, I would say. They are running just steady. P by E, if I see, is, yeah, P by E is safe. So overall valuation wise looking safe, and the way growth is looking up for auto sector, it is fine to take on a call, and with a stop loss of around 15%. Yeah.
Right, absolutely, sir. Thank you so much for discussing that, sir. Okay, सर, दिस वाज एक बहुत ही इंटरेस्टिंग सा डिस्कशन था. एक फाइनल क्वेश्चन अनूप सिंह सर का आया है. सर वो जानना चाहते हैं कि आपने कुछ बुक्स के हम लोगों को नाम बताए थे थ्रू आउट द पॉडकास्ट. फॉर आवर ऑडियंस, we'll be putting out a recording of this podcast immediately after the podcast. So of course, any section that you missed or if you joined late, you can always listen to it again. We'll also be putting a copy of it on YouTube, maybe, if sir permits us, of course. बट सर, जो बुक्स आपने सर बताई थी, रिकमेंडेड बुक्स जो पहले बताई थी, उसमें कैन यू रिपीट अ लिस्ट फॉर अस सो दैट आवर ऑडियंस कैन लिसन टू इट अगेन? एक रिक्वेस्ट है ये सर.
Sure, I would repeat them, right. Okay. So let's come to technical analysis. I would like you to first read, I think this is a book by Stan Weinstein. So how to make money in bulls and bear market, or secrets of profiting in bulls and bear market. That is the name, Stan Weinstein. Second book I would recommend is this Moving Averages One-on-One by Steve Burns. That's a good one. So that should get you going with the technical analysis part. Then you should definitely read How I Made the 2 Million by Darwash. Darwash box theory comes from that book. So these kind of 3 books can get you, and apart from that, have a good overview on Dow's theory as well as Wyckoff's theory. On YouTube videos you will get some good videos. I would also try to find them and put it back. But these are the two theories that you should look at it. So these are the books. Then another one is, if you are pure play momentum player, you should read the book by Mark Minervini. His first book, I think it is Stock Market Wizard. So that one, if you can read. I'm just forgetting the name of the book. Give me a moment. I'm googling it out. So this one is by Mark.
Right,
So
absolutely great.
this one is Think and Trade Like a Stock Market Wizard. So these are the books that should take you through the fundamental, for the technical analysis. For fundamental analysis, I would like you to go through the book by Saurav Mukherjee. You call it The Coffee Can Investing. Yep. Okay. And very one odd book that nobody talks about it and nobody told me before is Stock Manthan. Now Stock Manthan is made by one of a CA, Nitin Sharma, I believe. Let me get you the author name. So Stock Manthan is also very nice, clean book. No noise, no jalebi, nothing. Only the talk that you would like to know about the fundamentals. CA Nitin Sharma. So Stock Manthan, The Hunt for Multi-Bagger Stocks. This is a nice book. And these are the books. Then I would definitely like you to go through these 2 books for fundamental analysis. For psychology, that is the third pillar that I see in trading, investing, I would like you to go through YouTube videos by Randy Howell. Okay, so go through these YouTube videos by Randy Howell. Let me get the name correct again. I sometime might mess it up. So go through his YouTube videos around stock market psychology. And Trading in the Zone is another book that you can read, but that will need a lot of patience. Instead, if you just keep on listening to the video logs by Randy Howell, Randehowell. So these are very simple 10-15 minutes talks that he gives on YouTube. Just keep on listening them. You would get into the right conditioning of while we work in the market. Yeah, this is some set that would help you.
Right. Awesome, sir. Sir, this has been brilliant. बहुत मजा आया. I really do not want to end this, and I really want to continue just listening to you all night long on stock markets. I mean, this in itself, a topic is such amazing, and on top of that, you have such great experience and knowledge and wisdom that you are imparting with us so kindly. So nice of you for that, sir. But as they say, all good things come to an end. हम लोगों का we have already taken almost no, 1 hour 15 minutes from you. At this point, one thing I would request of you is please do allow us to host you again, sir, so that we can continue on this conversation. There are so many more questions that I have that I really want to learn from you. So please do allow us to host you again, sir.
Oh, my pleasure always. I love to talk with you guys. Or, once I'm done with my trades to 15-20 minutes of the day, time bachta bahut hai. So that will help me also.
Awesome, sir. Really looking forward to it. Thank you so much once again for answering all our queries and so many questions that I asked you and taking out time for us so nicely, so kindly agreeing to it. And for our audience as well, I would really like to thank them. We had for throughout the podcast, I think we had over 100 people constantly listening and learning with us, and this was amazing. Once again, thank you so much, sir, and to everybody, have a very profitable day tomorrow and a really good night.
Thank you. Have a great evening and make hell lot of profits in the market. Don't forget that. That's the goal. Thank you. Bye.
Absolutely. Bye bye, sir. Thank you.